So this is where most of the forex traders are getting it wrong. How to manage your risk. No matter how good you are, no matter how good your analysis is, no matter how expert you are, one of the crucial aspects of trading, or let's say of general business, is money management. So let me quickly share my screen so that we'll go straight to the points tonight on how to use our money. How to use money management to have a very good opportunity in forex trading. Are we all seeing the screen?
Yes, sir.
All right.
Yes, sir.
Okay. So good. When we talk about the money management, we are talking about how you secure your money. Nothing else than that. How you can secure your money so that you don't eventually blow the money. What is money? Money is an exchange, is a medium of exchange for goods and services, which means that every person, everyone need money in life to survive. But there are a lot of people, when they see money, they don't know how to manage it. So when you are doing business, if you don't know how to manage your assets, how to manage your money, you will eventually run to loss. You eventually run to loss. And when we talk about the management is the coordination, and the administration of a task for you to achieve. Hmm? You see, is an what it is an coordination and the administration of a task for you to achieve a certain goal. So that's those that when you want to, when you have a business, you establish a business. If you don't know how to manage your business well, that business will collapse. For example, you can see that it is the mother, or let's say the wife of the house, manage the house. When a man provide food and shelter for the house, so it's not depend on the manager. And who is the manager? Manager is the wife in the house. The wife in the house. So the same thing applicable to business. Anyone doing business, if it doesn't have a good management, any organization, any sector that doesn't have a good management, it will be very difficult for that person to be successful in the business he or she is doing. So that is the reason why we need to speak much on money management in forex trading. Money management in forex trading. Every business needs, to manage your your business, and I call it risk money management. So every business has risk. There's nobody in life, there's nothing in life exists that does not have what doesn't have any risk. When we are eating, we are at risk. When we are sitting, we are at risk. When we are walking, when we are driving, when we are doing all manner of things, whereas even to come to this world, we are at what? We were at risk. Understand? But how can you now manage our risk? Our risk. So that is what I want us to hammer and talk about tonight, please, because I've seen from my research and from my experience with traders, I see that even when you have a good setup, a very good setup, a very good trading strategy, a very good on how to approach your trade, if you don't know how to manage the trading capital, the capital you are using to trade, you will never be succeed. And that is why just be blowing the money, be blowing, you go and look for another money, you deposit, you blow it, you go and look for another, you deposit, you blow it, you deposit. Why? Because we don't have what we call money management. Money management in forex trading refers to the process of managing your trading capital. Process of managing your trading capital to minimize the risk and maximize the profit. That is to say that no how business you will do that doesn't take risk. And that is the reason why even when we go out of there, I will go out and say we are going to place of our work, we are taking risk. We are taking so along the line, we now look at how can I get to my office or to the place of my work safe and sound, so that you can be able to prevent the risk that you are going to engage or meet in the road or on the road. So it also involves setting the rules. If you want to have a proper money risk management, you need to what? Setting the rules. You must have the rules and the guideline on how to risk on each trade and when to enter and exit the trade, and on how to manage the overall portfolio, which is the overall business you are doing. I have some things which I want us to discuss today and have general question. Please, I want us to have a general question. And blowing of an account it's not exceptional to everybody. Everyone bound to blow their account. But what can differentiate between a successful man and a successful trader and unsuccessful trader is the way you manage your risk, the way you manage your portfolio, the way you manage your trading. And one of the crucial aspects of it is money management. So I have some tips which I want us to consider tonight now to have a successful money management in Forex. Number one, your risk per trade. This is where a lot of traders cannot, this is a question that a lot of traders cannot answer. From my research and from my experience and from some kind of traders that I've met in this industry, I used to tell them, okay, how do you analyze your trade? When they have a very good trade setup or strategy, I'll ask them, how do you cut your loss? How do you take your risk? What are the risk percentage you are taking on any single trade? Some of you say, well, since I know that my trade setup is okay, I don't care. So I'll just enter trade and apply the high lot size. They are continuing to. But I used to tell them and say, look, we are a trade trader. We are a trade trader. And a trade trader, we are trading on what is happening in the market, which is what the reaction of what is happening. That is what we are trading upon, which means that we are following the big brothers, with the big banks in the world. What the banks is doing, that is what exactly we are doing. Now we are not in control of any business, or we are not in control of the market. Anything can happen. But when anything happen, how will you not save your save your market? How will you save your business? That is what I'm. Number one is that your risk per trade. Anytime you want to trade, I don't know. Anytime you want to trade, okay, let's say, for example, I see Euro USD, that Euro USD is coming down, and I see a confirmation. Okay, this is my confirmation that Euro USD is coming down, and it's giving you 95, let's say 95% assurance that this market is going to your own direction. You need a work. And what does that work? What is the risk you can take? Once you have decided on an amount of money you are happy to trade with, the next step is creating your Forex money management plan, and is to establish how much you are going to risk per trade. This will help you determine where you will place your stop loss, and each time you enter the trade, this will help you. This will help you to place your stop loss each time you enter your trade. I have seen some traders. They told me, anytime they are trading, they don't apply stop loss. That when the market go, it will eventually come back. It's possible. But let me just say, it's 1 out of 10 times Then we as a trade traders, how many of us has money that can carry us, that when the market goes against us with 2,000 pips, 2,000 pips, that we can still in that trade? Some of us, we are using $5,000, $2,000, $3,000, $5,000 to trade. What if you use 0.01, 0.1, and the market went against you for about 2,000 pips? Because in the market, in Forex market, we have what called Forex market cycle, meaning that when the market goes up, it will surely come down, and it may take years, it may take months. That is why those our forefather traders like John Soros, Warren Buffett, all those people, our father, they has enough capital they are using for trading. Their portfolio is very huge. But some of us are still managing $500, $1,000, $200. You see, there is a need for all. Even those people, they used to say, I have some quotes that I have with me. They will say that anytime you want to trade, you have two things in your mind. How much are you willing to lose? How much are you willing to gain, irrespective of any amount you have in your account? So anytime you want to trade, how many of us have seen that and say, okay, this is my trade, I want to trade. How much can I afford to lose? How much can I afford to make when I want to trade? So that is why at times, as you see me, as a professional as I am, sometimes if I want to enter a trade and I see that I have very good setup, but I see that this trade will not give me an appropriate profit, or will not give me a kind of affordable stop loss, I will leave the trade. I will not trade it. I will leave the trade. I will not trade it, because I know that if my stop loss is beyond what my money can carry or can take, I will leave the trade and I will not trade it. So now the rules to follow, let me just give us. Anytime I want to enter a trade, the rules to follow is that for each trade, regardless of what is it, you must know exactly how much you are going to risk per trade. Percentage of risk to take trade. Each time you want to trade, you must not risk more than 2 to 3 of your trading capital. When I did my course 112, okay, we are taught as a financial marketer, as a financial trader marketer, financial trader, they said that we should not risk more than 1% of our trading accounts. But imagine in Nigeria now, or we as a trader, how many of us can have a kind of $1,000? And out of that $1,000, if you want to risk, how much are you going to use $1,000? 1% of $1,000, how much is it?
$10.
$10. 1% of $1,000 is what? $10. But if it is $100, 1% of $100 is what? Is just $1.
Yeah.
How many of us can enter a trade and say, I am going to risk $1? So you will discover that $1 in, when we are using 0.01, $1 is just like 10 pips away from your entry points. And you know, when the market is moving sometime, it can try to go out of your direction for like even 30 pips before you now start going to your direction. That is why anytime I want to enter a trade, my minimum stop loss I used to take is 50 pips. So that is why I used to encourage when they want to enter a trade, when you want to start trading. Look, if you want to trade and you have $100, you must not trade more than one trade at a time with minimum lot size, which is 0.01. Now let's go. Each time you want to trade, please go and write this one down. Each time you want to trade, you must not risk more than 2 to maximum 3% of your trading capital. That is, if you have $1,000 in your account, you must not risk more than 3%, which is what? $30. $30. Anyone using $30 to risk, what do you think is going to be is lot size? Consult person use 0.5 lot size. Can that person use 0.0? Can that person use one lot size? No, it won't. Now let's go. This risk percentage we are talking about, how can you now have access to it? This I want to say now, most of my students, they have this thing. Most of my students have this thing. That is what you call Forex position size calculator. You can use Forex position size calculator to know how much risk, or to know the risk you can take to any trade. To know the risk you can take to any trade you want to trade. So I don't know if you have it. If you have time, let's go to Google. And for someone that have Android phone, we can go to our Play Store or Google Store. Let's download Forex position size calculator. This Forex position size calculator is going to help us a lot, and I'm going to show us so that we will see the way it look like. Let me see if I can share my video for you guys. The place where I am is very dark, but let me see. So I don't know where you can see the screen. Okay, let me see. Can we see my screen?
Yes.
Can you see my screen? There is one hub is above mail. So the something has is in yellow orange color. Can you see it?
Yes, we can see it, boss.
Yes, only orange color. So please just go to Play Store. I have some of my students have it already on their phone. They have it already on their phone. So, but let's go to the website. Let's use the website too. Let's go to website. Let me share the screen. Let's go to website. This is website. Okay. Let's go to, let me share this one. Can you see my screen?
Yes.
Okay. So
Yes,
let's go to Google, then just type Forex position size calculator. So when you get there, the first thing you are going to see is that is a website, and the website is called My FS Book. My FS Book is a site that display the news, which is daily news. I'm going to teach you on how to read news later. So that will be maybe after our lecture. Maybe next time we want to do our Zoom. Maybe I will teach you how can you read your news? How can you read news? Like today, now we had a kind of we have a news, and the news that are open today. Most of the people that trade news, they don't trade this news today because the news was a kind of a spark. It went up and went down, and was just doing a kind of, so it's not straight. The news today was not straight. But I don't trade news, but I know how to read news. I know how to. I've done that before, but I know how to read news very well. I know the forecast. I know the actual, and I can tell the forecast and actual. So now, most of us now, when you check okay, don't worry, let's go. You go to Forex position size calculator. When you get there, just click on it, or you can go to my FS Book. You can go to my, let's clap for Forex for you as display. This is Google ad. Mr. David. Wow, kudos for you guys. Get daily payouts. If you have not been using Forex for you on this platform, please, I would advise you. This is a very I made a withdrawal yesterday with my cryptocurrency to cryptocurrency. It's not even used up to like 50. In fact, 15 minutes. They credit my account. Cryptocurrency. I withdraw cryptocurrency. So they are very good. So let's go to I want to remove this. Let me see how I can remove this. Okay, let's go to okay. Now when you go to this, you will see in their site, you will see foreign position size calculator. I think is on let me see, where is it? Foreign position size calculator. So, yes, this is Forex calculator. You see Forex calculator. You can see, you now see when you get home, you see Forex calculator. Then at the Forex calculator, you see pips calculator. So pips calculator. So at that place, this is where it will take you to. It will take you to. So you can see this is Euro USD. Now we are going to fill all this place. And what this one is telling us is that it will tell you how much you are going to lose based on the lot size you will use and based on the what, on the percentage you want to use. It will tell you when you use the percentage to risk, it will tell you what you are going to lose, and it will tell you the lot size to use. Now let's assume you have done your analysis, you are through with your analysis, and you want to trade Euro USD, and you know USD is coming down, whether it's going to buy or it's going to sell. We are not concerned. But what your concern is that how much are you going to risk? Which currency do you want to trade? Euro USD. Let's leave it on Euro USD. I mean, use it on USD. Then we want to trade Euro USD. So any currency you want to type, just type it here. If it is odd USD, type it here, or you search in this box. But want to do Euro USD. Euro USD is there. Then account size. Your account size means that how much do you have in your account? Let's say I have $1,000. It's not your running trade. It is your balance, the balance you have in your account. Okay, let's say it's $1,000. Now you now say, okay, out of this money, I want to risk 1%. Let's say 1%. So I want to risk 1%. You just type 1, you put 1 there. Now you now said your stop loss. That is why anytime you want to enter trade, you must know you must know your stop loss. Is my stop loss is it the minimum stop loss I normally use? Minimum that I normally use is between 40 and 50 stop loss, because I don't scalp. So the pips, the stop loss pips I normally use between 40 to 50 pips. 40 to 50 pips. So let me say I put 50 here. 50 pips. That is stop loss. Now, the trade size, leave it at 1. Let it be at 1. Now, you now click on calculate. It will give you a result here. It will give you the units and the sizing. So just click on calculate. Now, can you see? With your $1,000, what you can afford to lose based on your stop loss, pips, 50, you will lose $10. You will lose what? $10. Then the unity does not, we don't use, we only make use of 2 things, which is the money, which is USDT, and the sizing. Now, with your $10, you lose $10. Now, what is this sizing means? Lot size. The lot size to use is 0.02. When we say, how much I have $1,000 in my account and I'll be using 0.02. That's crazy now. When am I going to make money? So this person is a very, very conservative trader. Let's go to an aggressive trader. It means that are you hearing me? Are you hearing me, everyone?
Yes, boss, we can hear you.
It means that if this person has $1,000 in account, have $1,000 in account, and is losing 10 based on because it's exposing 1%. 1% to trade. Is using 1% to trade, which means you want to lose 1%. How much or how many times do you think that this guy have to trade and lose before you eventually blow all the money? What you just need to do is just divide 1,000 divided by 10. It means that this guy has opportunity to trade for 100 times. Is that not true? Meaning that
Yes, sir.
he can trade for 100 times and lose it for 100 times. 10 times, 100 times. So when you are trading and you lose first time, second time, fifth time, sixth time, eighth time, 10 time on a rolls, there is a need for that person to go and sit down and wait for at least quit for trade for like a week. Let him go and rest for a week. So it means that there's no how when you are using 1% of your account, exposing 1% of your account to the trade, you can never lose this $1,000. So let's go to aggressive trader. Let's say the person is using 10%. Oh, he's like to be exposing 10% to his account with 50%. I mean 50 pips stop loss. Let's calculate. Can you see? So that person will be what? Will be losing $100 on a single trade. And the lot size the person is going to use what is 0.2 compared to 0.02. And you know, the more you have, the more the lot size, the chances at which you can make more money, and the chances at which you can lose more money. So look at this money now. If that person trades and they use 0.2 and he lose that money, he lose that trade, how much is going to lose? He's going to lose $100. And you know, before this guy will blow this money, how many times is he going to trade before he will blow $1,000? He have to trade for like what? 10 times. He will trade for 10 times. So if you trade second time, well, first time, $100 go. Second time, $100, $200. Fourth time, third time, 300. Fourth time, 300, 400. Fifth time, 500. So you don't, for more than 5 times, if it is 5 times, you don't lose 50% of his account. Now imagine to somebody that is now using 15%. Let's calculate 15%. Okay, if I want to trade, I would like to use 15% of my accounts to trade. So let's calculate. This person have to be losing how much? $150 on each trade, on each trade he's taking. It means that you have to what? You have to use 0.3 lot size. 0.3 lot size. And this person have to draw. Let's divide 1,000 divided by 150. So how many times this guy is going to blow his money? So out of the three people, 1,000 divided by 150, that is 6.6.
6 times plus.
Yeah, 6 times plus before you blow the account. And do you know sometimes you can trade and lose for almost like 3 times, and you will not make money for like 3 times. Three trade, you may not make money on it. So if that guy trade for like 3 times and he lose the money, what happened? You don't eventually lose 50% of his account. So out of these 3 person or 3 people that trade, the one that use 1%, 10%, and which one do you think is going to live long on the markets? The one that
1%, boss.
1%. But do you now know something that's funny? Do you know something that how will you be making losing 10%? $10, $10, and at the same time you are making $10, $1,000, $1,000. Are you going to be making money? There's somebody that has you 15%. And 15% he trade, he make money, which is 1:2. That is $300. 1:2, $300. 1:2, $300, and he traded for like 3 times, and he was 150 times 3. That is how much? That is $450. Compared to someone that now be using what? Now be using 1%, and is now use 1:2. 1:2, which is what? Which is $20. 20 times 3, that is $50. So that is why. So please, I want you to work on this very well. Work on this very well. Anytime you want to trade. So let's go. I'm having 5 minutes to leave after to end this section. After 5 minutes, please let's connect immediately. After 5 minutes, I want something log us out. We are going to connect immediately. So let's go back to our board and continue. Continue. So this is how to make use of percentage each time you want to trade. Another thing to do is you have to establish risk reward ratio. Risk reward ratio. What do we call risk reward ratio? You know, I told you the other time, I say anytime you want to trade, you are using 1% of your account to you want to lose 1% of your account. When you are losing 1% of your account, okay, that is your stop loss. Now, what is it going to be your profit? So what is going to what is it going to be your profit? Now you know how much you are intend to risk per trade, which is the one we did the other time. You must also establish how much you are aiming to profit or to gain from that risk, and use it to help place your trade, and use to what? To help you place your trade. What are we saying is that, okay, you know that every trade you are taking, because you are using 1%, you'll be losing what? You'll be losing $10. But how much are you willing to gain? That is what we call 1:1, 1:2, 1:3, 1:4, 1:5, 1:6, 1:7. What this one is saying is that if you are risking $10 in your account, you must not look for profit for $10. Your profit will be either 1:3, 1:2, 1:1. I mean 1:2, 1:3, 1:4, 1:5. Let me explain to you. This choice will be depend on your strategy and your trading profile, specifically your appetite for it. A risk to reward ratio of 1:1 means that, for example, if your maximum acceptable loss is 100, your profit target will also be 100. That one is 1:1. And you know what? You can trade for like 5 times, and you lose what? You lose like 3 times. If your loss is 100 and your profit is 100, you lost trade 3 times, which is $300, and you now make gain, which is what? On $200. Subtract 200 from 300. What do you have? You still have a losses of what? Loss of $100, because you are using what? You are using 1:1. I don't know whether that one is clear to us. But when you are using 1:2, it means that when you are risking $100 for your profit, for your loss, you are risking what? You are making $200 for your profit. And what this one means that if you trade for like 5 times, and you lose for 3 times, which means that you lose $300. And you know your risk reward is what? Is 1:2, meaning that 200. So you lose 3 times, you gain 2 times, which means that 300 minus $400. Your profit is $400. Your loss is what? Your loss is $300. So minus 200, 300 from 400, you still have a profit of $100. If it is 1:3, it means that you are risking 100 to make 300. If you lose for 3 times and you win 2 times, your loss is more than your loss trade is more than your trade. But do you know that your profit should be more than loss, because you are making $300 times 2 times, which is 600, and you are losing $300, which is 3 times. So which means minus 300 from where? From 600. You have a profit of what? Profit of $300. So out of this now, which one will you now go for? Okay. Welcome to the second part. Now, anytime I want to enter trade, if I've done my analysis, and my analysis is telling me that it is ready for me to enter trade, I have to consider two things. Number one, I will consider my stop loss and I will consider my risk reward. The minimum risk reward that I do, that I normally take, some of it that doesn't know means very well, is 1:2. If I'm risking 50 pips, for example, my take profit must not less than 100 pips. If I'm going to risk like $100, my take profit must be what? Must be $200. That is the reason why I normally tell people that anytime you want to enter a trade, your stop loss must not be greater than your take profit. If your stop loss is greater than your take profit, in fact, you are exposing your accounts to a big risk. So let's go. Please, I want to also urge us that anytime you want to trade, make sure that your take profit is more than your what? More than your stop loss. Your take profit must be times 2 of your take profit minimum, times 2 minimum, which is what? If your take profit is, if your stop loss is 50, your take profit must be 100 or must be 200. So normally I use minimum of 1:2. So I can use 1:3, 1:4. And let me just show you the reason why some of you just look and say, if I want to enter a trade, you will see that my trade, I now have a minor, a kind of stop loss and a big profit. Oh, Mr. Raifu, Mr. Rafiu.
Rafi, yes, sir, I'm with you.
Do you know, purposely because of you, I did Hero JPY's video.
Yes, I know.
Are you still on that trade? You have left or you have come out of the trade?
I have not come out of it yet.
You are still there. So
Yes,
can you
sir.
see the screen now?
Yes, I can see
I
it.
send this on the YouTube. I created YouTube and I created a video and I sent it to YouTube. You can see that by now your market, your trades will have been reducing from the loss, right?
Yes, sir, that's correct.
So just to let you know that you guys, you are coming to my own level. It's a matter of time. Some people are telling me and say, your group, that I didn't do much of things again for you guys. I know what I'm doing. I can't rush you. If I'm rushing you, not get anything.
That's true.
You don't have any specific time. Unless if I say I'm not teaching you again and I say I'm not in hedge, then you can now begin to talk. So people are just saying, boss has forgotten us. Why? Because I know if I'm to take you for 2 years, I'm ready. If I'm to take you for 3 years, I'm ready. If I'm to take you for 1 year, Forex is not that you have to do it and leave. No. If you take it as part of your life, you will make good money with it. When I did video, I told my people, I said, my students, I said they should enter buy from this level here. And this is where he was then. And what do you see now? It's going up. It's going up. And I want to tell you that this guy is coming here. If he can break this level, this guy is coming here. So it's just a matter of time. So you can see that I have a small stop loss. My stop loss is around this place. My take profit is what? It's around this place. So let's now look at that ratio. I'm talking about the ratio. Let's look at the ratio. And I enter my stop loss around this place. I enter buy here. Look at it. I'm risking 70 pips. Let's say 70 pips. To make how much? Let me go. Let's go from entry point here. Entry point here. Let's say from this point. To make how much? 177. I'm risking what? I'm risking 70 pips to make 177. Divide 177 by 70. How much is going to give you? That will give you 2 point something.
2 point something, yes.
So this is 1:2.3 or 2.4.
Yes.
Understand? Yes. So this is the way I trade. If this market is not going to give me, like, maybe it's giving me something like 1:1, I may not trade it. So now let's go back to our chart and continue our discussion, let's go back. So we are talking about taking the risk reward. Are we okay now? These are the part of the tips you can use to have a perfect money management to your what? To your account or to your business. Number 3 is keeping a journal book for planning and analyzing your trade. In fact, this keeping your journal is a course on its own. It's a course on its own. A lot of us, as we are here, as we are trading as a trader, we don't have a record book. It's wrong. It's wrong. It's wrong. If you check my book, I have a journal, I have a record book. Some of the trade, some of the strategy I'm using 8 years ago, is still in my book, is still in my journal. You see, I want you to know something, that Forex has what we call Forex sentiment and Forex circle. We have Forex circle, we have Forex sentiment. What is the Forex circle? Forex circle means that the way Forex sentiment, Forex sentiment means that the way the market is moving. Sometimes, for some period of time, periods of years, we can have market moving in a one direction, up or down. And some years, sometimes, some months, it can be on a ranging. You should have a strategy for this. As you see me, I have a strategy for ranging market, I have a strategy for trending, I have a strategy for mid-time trade, I have a strategy for long-time trade. I have more than 8 strategies that I'm using. But do you know, I'm using one for an effective movement, using one for long term, using one for short time trade. So let's go. You also have to develop a journal, because sometimes you may take a trade. When you take that trade and you have you make a profit on it, you have to write, what is the reason why I take this trade? What makes me to make money on this trade? My strategy that I use to trade this trade. Then if you have loss, you have to check and say, I took this trade. What is the reason? In that book, you write down the reason why you take a trade. Go and ask and go and do your research. Most professional traders keep record of the trade they take. That is why the scalper don't have journal book, but the professional and the intraday and the swing trader has they has what? Journal book. I posted something on Telegram group today, maybe in the evening, that says that scalping is not. Let me check. So one of my mentor was saying something. He was talking about the scalping, that the scalper doesn't last. They don't last. They will eventually blow the money, even when they are having a kind of opportunity, and they are having a kind of they are making money. They will eventually blow the money. Why? Because scalping won't take you anywhere. There are some people that are very good on scalping anyway. I don't blame. I don't try to. I don't try to. Okay. Nefula says that trading the news. Okay, news is like a black hole of distraction. But there's a place where I wrote about the it was Warren Buffett that talk about the scalping. Okay, I think it should be here. Let's go. Now, the number 4 things to talk about is take a break. Please, what do I say? Take a break when you are losing. Take a break after a series of losing trades. You see, this is what's attached to emotion. When you trade for the first time, second time, third time, fourth time, fifth time, and for that rows, you are just losing. If the care is not taken, if you don't take break, you will eventually blow the money. I don't know. It is what has happened to me in the past. All what I'm saying is what has happened to me in the past, that I joined together, I pick together, I poke together, and now do some research on it. That look, anytime you are trade, first time you trade, second time, third time, fifth time, and you lose, please stay away from your system. Close your system for like 3 or 4 days. Don't even touch it. Close it. Don't touch it, and let's go. Go and do other things. By the time you come back to it, it will your brain will have refreshed, and it will now look as if what you have not even you have not even handled or any market before. But when you are trading, you are losing, and you keep on trading, and you are not settled, you eventually blow the money. One of the part of the money risk management is that take a break after after a series of losing trades. Now, the last one anyway, not the least. Withdraw profits. Sometimes many traders are guilty of never withdrawing their profits, or not even doing it regularly enough. If you start to make a sizable return in your trading, withdraw some of it, enjoy it, do something worthwhile with the money. You see, it's going to be a bad thing when you swept for like 1 whole month and you're able to make a reasonable amount of money, reasonable money, and at the end of the day, second month, you now throw the money back to the market. Emotionally, you will not be stable to trade again, because the joy of a trader and the way we are taught and the way we are brought up is that you don't keep money, you don't keep your profit in your trading account. In fact, if you don't lose that money at that particular time, separate an account, open an account. Thank God for Forex for you. Forex for you can open, inside your wallet, you can open about 3 to 4 even wallet accounts. You transfer it there. Keep your profit. That's what I do. Almost every 2 weeks, I transfer my money back to my. I will know that because I have made money. Even for the fact that I have a profit, I am withdraw my profit, I transfer it to another bank. It's going to give me a joy each time I want to enter trade. I say, I will make money with this market. But if you have not cultivated the habit of withdrawing your profit, please, let's start. If the $3 you see today, transfer it, or you make it like one every month. Okay, every month too. Because I have seen some trader, they will tell you and say, I made money for like almost the first 2 weeks of the month, and at the end of the day, I increased my lot size. Because by the time you have $1,000 in your account, you have $5,000 in your account, and you are making you have already made like 10% of your account within 2 weeks. You made 10%. What will you do? That ego will be there for you to increase your lot size. You increase your lot size. And maybe the time you increase your lot size, it might be when the market does not favor you. You enter it, then eventually the money just go like that. But what I normally do is that if I make like $20, I may withdraw like $15. I will keep $5 in my account just to like a little bit boost. But if you are building your account, okay, I want to build this $100 or $200. I want to build to $1,000. That one, the difference. A difference. And when you are building your account, you have to be very careful on the lot size. On the lot size, not that you trade lot size today, where 0.01, then you go next 0.01, you go in the next second day, you use 0.05, third day, you use 0.01 again, the fourth day, you use 0.05 again, and the fifth day, you use 0.04. The next day you use so you don't stable. You have to be you have to stable when you are using your when you are trading account using the stop loss. So I think I want us to stop here and let me listen and entertain to the questions. Let me listen and entertain to the question. Any question, please let's ask the question, because after this lecture, I want us to have a kind of a total change to our trade, so that we not just be blowing your account anyhow. Any question?
From my hand, boss, I don't think I have any question to ask.
Okay.
I have one question.
All right, sir. Mr. David.
All right. So the question is, sorry for the small background noise, everybody. The question is this. So I really understood the class. Thank you. But I want to ask one very important question. I always ask myself when I apply this, when I trade,
Okay.
and especially when I'm trying to do my stop loss.
Okay.
You know, I've already said, okay, I want to lose so amount.
Okay.
That means I want to go. My stop loss wants to be 50 people. Needs to be 50 people.
Okay.
And now I've done my analysis. You know, you setting stop loss. A lot of people use different parameters. You can use resistance and support. You can use ATR,
Okay.
different things. So I'm using support and resistance. And I've seen that the next support or resistance is probably 80 pips away.
Okay.
So I want to. That's the reasonable place I should put my stop loss. But now because I've already said this is the risk I want to take in this trade, which is 50 pips. You understand? So I'm a bit confused now. Should I go with, because I want to take 50 pips risk, I should reduce my stop loss to 50 pips, or I should do the right thing and put it in the next support for resistance, or I should just ignore the trade since it doesn't fit in my plan.
It's better. It's better you include the trade. Why? Because this is a business, it's not a gambling. And to every business must have the rules and the regulations that guide you to be profitable. When you have something like this, if your take profit, your stop loss is 80. I'm not giving you guys that you have to, your stop loss must be 50. But I'm talking, in fact, sometimes I use 150. So if I'm using 150, definitely my take profit should be 1:2, which is 300. If it can't give me 300, I will not trade. I will leave it. I will leave that trade. I will not trade. Even if you give me a good setup. But in your own case, when you have something like that, it is good and advisable if your risk reward is not, your profit is not up to your take profit, or is not good enough, you can leave it. You can leave that trade and you look for. That's why I said, there's a lot of opportunity in forex trading, in markets. So if this one doesn't work for you, another one will work for you. I don't know whether I've answered the question. Are you clear with it, sir?
Yes. Very clear.
So any other question? If you have any question, you can talk now, so that after in the next 3 or 4 minutes, you'll be able to round up. Any other question?
Okay. Okay.
Yes.
I'm okay, sir.
Okay.
So
no question from my side.
Okay. Then last thing before we go, there is one thing I want us to understand, and that is the issue of trailing stop loss. Trailing. Before we go, please, it escaped me. I wanted to add trailing stop loss to this our lecture. So trailing stop loss is one of the money management that everyone must do when you are trading. And what is that? Trailing. You have to be trailing your trailing stop. So what is the thing about? Trailing stop loss means that you place your stop loss inside your profits. And this one has percentage. And what is percentage? If you are targeting 300 pips, for example, let's say this one as an example. Let's go to the charts. I want to trade. So look at the moving this Euro JPY. If you are targeting something like 177, like I've said the other time, 177 for the, let me check. This is okay. Let's say 200. We are taking 200 pips, and the market has moved up to how many? Let's assume you enter buy here. This is your current market. You have moved like 97%, $97, 97 pips. This 97 pips, there is a need for you to save like 30 pips out of it. 30 pips out of it. Meaning that you place this, your stop loss, you just shift it inside your profit, just to secure the profit you are making. Part of this process is what they call money management. because you don't want to put anything can happen. The market can start coming down, and you don't want to what? You don't want to lose the money. You have what? You have already make on your running trade. So I used to say this, that please let's have it in our mind that anytime you want to trade, if you are trading 200 pips and you reach like 100 or 120 pips, save 30 pips of it. Just say, let me just say, save 20 to 30% of your account, of your what? Of your that profit. Let's say your only profit is what? Only profit is what? Is $100 now. Let's say $100. Save 30 out of it. Save 30. Because when the market is now running down or is going against you, that profit you have made, it can turn to loss for you. It can turn to minus for you. So when you now take that one, then at least it's part of it. It's part of it, and it's going to help you to even develop and start making a constant profit. Thank you very much. I think we are okay by now. Thank you very much. So by tomorrow, is it that tomorrow or next tomorrow, we that are doing professional course, I may likely to have a course, to have a class with you. Then secondly, my Mr. David, Mr. Auntie Angela, and Mr. Kingsley, we should have analysis for the market you are going to trade for. Okay, anyway, maybe I should do it together. The analysis. You know, I told you something that I normally analyze from the beginning of the month. And that will happen to Euro USD. Go and check Euro USD. Euro USD form double, lower low, equal low on monthly. That was yesterday. That is why you see Euro USD went up yesterday. People are just saying, I said Euro USD just did a what we call double. Let me just show you before we leave. A form double equal low, and you can see. So it form an equal low. That was yesterday. That's why it went up, and now we are expecting Euro to come down. Euro is coming down. It just did a minor retracement yesterday. Why? Because this is an engulfing pattern. So I will patiently wait. I'm not on Euro USD now. I am patiently wait for the market to break. Let's go to 4 hours. I'm looking for a breakout of the support. Yes. If Euro can break, this support level, this level. So definitely, let me go to daily. We are going, and Euro is going. There's going to be a massive drawdown. At least Euro will get here before we say anything, before we do anything. We get to this level. Massive drawdown. And when you look at the chart pattern, the Euro is trying to form. This is M pattern. M. Can you see? So it's coming here to complete the M. So it may be a year, maybe 2 years, maybe. See, it's coming here to complete the pattern. Very simple. So when the market break here, effectively break here, now say would they look for sell until we get to what? We get to this level. So that's all. Any other question? After the no question, thank you very much for honoring me to take you tonight. I'm grateful. God bless you. So see you tomorrow on Sunday. Bye for now.
Thank you so much for your time.
Thank
boss.
you, sir.